Thank you. Good morning, everybody. We were having an ARSC meeting last week to issue our exposure draft on compilation, and Janice Gray, one of our ARSC members, said on the call, you know, the western region of NASBA is meeting this week, and they are so enthusiastic over this exposure draft, I think you should come down and feel some of the love. So I appreciate the invitation and the time on the agenda. What I'm going to give is an accounting and review services update, but I'm going to focus on compilation because I want to feel some of that love. ARSC issued an exposure draft a couple years ago on compilation, and after we received the comments, we pulled it back and retooled and started over. And some of the comments dealt with whether a compilation should be in a test or not a test service, and like all standard setting committees, we pay close attention to all the comments. And seriously, on the call last week when Janice said that NASBA has some concerns, I just want to communicate, ARSC wants to get this right. Compilations are done all over the country by most firms. So we're very interested in the views of NASBA, and I look forward to the dialogue today and in the coming days and weeks so we can get this right for practice. Before I get into the PowerPoint, I'd like to set the stage on a few things. SARS and the compilation standards were developed really before the technology as it is today. And I was in practice then. When I started in practice, we did audits and unaudited statements. In the late 1970s, compilation review came in. And I've been working on compilations and reviews ever since. But the technology is totally different today. And one of the things ARSC wants to do is kind of get compilation right-sized for where practice is today. And there's some impractical conversations that we're having with clients today on submission and on management use-only statements. For example, on submission, I think if I handed out a piece of paper and gave some options when you submitted financial statements and how you interpreted the standards, I think we'd get all different answers in this room, and we get all different answers all across practice. So I think there's an opportunity to maybe help the practitioners get into a position where they're complying with professional standards. The other one's management use-only financial statements. I find myself in a lot of impractical conversations with clients in terms of management use-only financial statements. Will you help me prepare our financial statements? Will your firm do our general ledger and financial statements? Sure. You want our firm name on it? I don't need that. I just need the numbers to run my business. And then those statements leak out, and they're leaking out all over the country. They're finding them in boards' hands. You say to management, you can't give it to your board. They're a volunteer board. They're not part of management under the COSO definitions. And they look at us like, are you crazy? This is a volunteer board that's helping me. Maybe it's a not-for-profit situation or for-profit situation. You can't give them to other people throughout your organization. They're not part of management. If you're going to follow the definition of management use only. Or we're helping them do their financial statements over the cloud or the computer. We're never even going to their office, and we're not face-to-face. And they don't really care if they have our firm name on it or anything. They want numbers to run their business. And then recently, the other development is peak, defined in 101.3 that the preparation of financial statements is a non-attest service, which has been a question in practice. And my understanding is NASDA supports that strongly, and certainly ARSC supports that strongly. So now we're in the model of preparation of financial statements as a non-attest service, which by definition, independence is not required. So ARSC is looking at all those things in terms of determining what is right for practice today. So PEAK has done their job, and ARSC is following up. And I'm going to go through some of these slides fairly quickly and get right to the compilation because I think that's what you're interested in. There's our objectives, and I know you have that in the book. I can look through that. The Clarity Project, Clarity, some of our thoughts on Clarity. We're not trying to converge with the international standards like the ASB did. The international standard setters are way behind the U.S. in terms of compilation review and their basis behind some of their international compilation review concepts we just couldn't accept. So on the compilation exposure draft, we are reacting to peak, and as I said, peak amended 101.3 to clarify that preparation of financial statements is a non-attest service. So what's ARSC's reaction to peak? Here's a key point that I think we've got to, that ARSC spent a fair amount of time on, and I think we have to consider. Is compilation preparation of financial statements, is that synonymous? Or is compilation something different than preparation of financial statements? ARSC came down on the side of it's synonymous. There's not any distinct differences when a client asks us to prepare financial statements to when they compile financial statements. And we can change that. And that's something we're interested in feedback on. But the ARSC committee spent a fair amount of time talking it through. And the conversations were very interesting. At one point during the year, we came to what I thought was kind of an aha moment. That if you look at the ethics standards really cover everything that we need in the compilation standard. And we had serious conversations of, do we even need compilation? Because if you follow, and I'll run through some of them that we looked at, if you follow Rule 201, the general standards, where you have to exercise due professional care, you have to have competence to do the services that you do, whether they're tax returns, consulting services, whatever, as a professional. You have to adequately plan and supervise for in the engagements you do. All of that, we certainly think we have to do as professionals in the compilation. If you look at Interpretation 102-1, knowing misrepresentation and preparation of financial statements and records, well, we certainly think as professionals we have to do that in a compilation. Rule 102, integrity and objectivity. We have to do that as CPAs, doing compilations. Interpretation 501-4, negligence in the preparation of financial statements or records under Rule 501, acts discreditable. We certainly have to follow that. So ARSC talked about these ethics standards prohibit a member from making any materially false or misleading entries in the financial statements, whether you're in public practice or private practice. What more are we going to put in a compilation standard? The standards are already there for all of us to follow in the ethics standards. So do we need compilations? We came down on the side of yes, we do. We talked about, seriously, should we change the title of compilation to preparation of financial statements? Because that's what we really think it is. There's no assurance given. There's nothing else that we're doing in a compilation other than preparing financial statements. And after listening to legal counsel and understanding the state board rules around the country, it would cause a lot of turmoil and change and take years to get all the literature lined up. And it's not that big of a deal, so we came down on the side, let's continue to call it compilation. So Peak made their change. Preparation of financial statements is a non-attest service. We no longer have to be independent to do that, just like we don't have to be independent to do bookkeeping services and tax returns. So what do we do in the compilation standard? Here's how we dealt with independence. Since compilation is a non-attest service, it's not required, because we're taking a position compilation is preparation of financial statements. We're just following the Peak model. Reporting is required when an accountant has a direct. We looked at a survey that was done when the reliability project was going on, and it came, an independent survey, and it came back loud and clear that if we have a financial interest in a company, the public wants to know that. So in the public interest, we're suggesting in the exposure draft that if we have CPAs, even though disclosure of independence is not required, we should disclose when we have a financial interest. So we built that into the model. Reporting is required when we receive a contingent fee, commission, or referral fee. That's an ethics rule. We can't change that. So what we're saying is an accountant should have the option of disclosing independence or the lack thereof. That's not our decision. We're following and reacting to Peak. We can't require in a non-attest service the reporting of independence. So again, if you follow the model, preparation of financial statements is a compilation. We can't, ours can't do that. Peak already made the decision. NASBA supported that. ARSC is supporting that. And I think that's very right for practice. So then we said, where do we go? B and C, direct financial interest and commission contingent fees, You could disclose that as a flat-footed statement. At the end of your report, you could say, I, Chaz McElroy, have a financial interest in this client, ABC Company. I, Chaz McElroy, have accepted a contingent fee or referral fee for this client. That would follow the ethics rules, or what we think is in the public interest. Or we said, you can just say we're not independent with respect to XYZ Company, not disclose the reasons. That accomplishes the same thing, and again, we're in harmony with the ethics rules and requirements we're to follow. Or we could say, we're not independent with respect to XYZ Company because I have a financial interest in the company, and if I disclose the reasons, as with SARS-19, I should disclose all the reasons I'm not independent. So that's how ARSC talked through what we feel are the required ethics rules in reporting on in preparing financial statements for clients. It's what we have to do as CPAs to follow the ethics rules, and we're very interested in your feedback on that. Again, we're not looking to set independence rules. We're not looking to set ethics rules. We're looking to set what should the correct model be for practice to follow the ethics rules in preparing financial statements, i.e. doing a compilation for a client. So then we got to reporting. When should you have to report? Well, if the client engages you to report. If the financial statements contain departures from the applicable financial reporting framework, we feel it's appropriate in the public interest that if the financial statements have a departure from the framework, we as CPAs report that and say that. There's not an appropriate legend on the financial statements, and I'll get to that. If the accountant has the direct financial interest or has the contingent fee or commission or referral fee, we think we should report and tell the public that. So a report is required when we have those situations, all in the public interest. And many of our conversations during the ARSC meetings are, what's in the public interest? What should we as CPAs do in the public interest when we're preparing financial statements with clients? What are we as CPAs required to do when we're preparing financial statements and disclosing? Here's where ours came down. So when are we not required to report? Again, preparation of financial statements is a non-attest service. It's like bookkeeping. It's like doing tax returns. We're not required to report when we do bookkeeping and we finish the general ledger. We're not required to report when we do the tax return. We're not required to report when we do all the other non-attest services. Why are we required to report when we do a compilation? And why is the required report a compilation? Why isn't it a review? Why isn't it an audit? Why are we going to require reporting for this non-attest service? So again, I'll go back to here's when we felt we were required to report in the public interest and to comply with ethics rules. When are we not required to report? If all the disclosures are on the financial statements, the applicable reporting framework is on each financial statement. Balance sheet, parentheses, GAAP basis. Statement of assets and liabilities dash income tax basis or cash basis. If that's there, the reader knows what basis of accounting it is. If there's a departure from that basis, you have to report. If there's not a departure, maybe you don't have to report. If there's an appropriate legend on the financial statement saying there's no assurance given by a CPA, the two legend examples we came up with are below. That's exactly what the report says. If we have an engagement letter and an agreement with our client that states that, we're saying exactly what's in the report. Our suggestion is that we're not required to report if we're meeting all the requirements. So that's how ARSC is suggesting the model. Not misleading the public. We can do what clients want, prepare financial statements, help them get the right numbers for their business. We have to follow all the ethics rules. There can't be anything that we know is wrong with those financial statements under the ethics rules. We don't need that in a compilation standard because it's already in our ethics rules for all the services we do for clients. The reason ARSC supports the financial statements for third-party use and the legend, and this is just a summary of bullet points that we put together as ARSC, saying why are we comfortable with that? First of all, we're making the suggestion that compilation is a preparation service. It's nothing more than preparing financial statements. And again, we can change that basic assumption. Compilation is a non-attest service. Again, we can change that. We can say compilation is an attest service. But understand our thinking if we say compilation is an attest service and we want to have independence reported every time we issue a compilation. We want the CPA to make the determination of your independent just like we are today and report it. We're going to separate compilation as an attest service. Preparation is a non-attest service. We can't change that. Peak's already done that. We as CPAs will then be preparing financial statements for clients and giving them the clients. And we have no standards or rules to put our firm name on it, to report any departures, to have them peer-reviewed, or anything. So preparation goes the route of non-attest services, just like bookkeeping services, tax services. There will be a lot more preparation of financial statements with no reports or no CPA required reporting. That's why ours said we think it's time, given what Peak has done, for us to say compilation is a non-attest service. That model requires us to say independence is not required. Now, we built in some required instances, the ethics rules. But if you want independence required in a compilation, we're making the decision, and ARSC is wide open to views on this. We feel we're making the decision, we're keeping that in a test service. Somebody's going to have to write standards for preparation of financial statements and what the requirements are to give it to clients. So again, that's a basic thing we've got to think through. And if you're against not reporting independence in compilations, I would be right where you're at without a year and a half of sitting in hours and hours and ARSC meetings to getting there. I'm trying to boil it down into 20 minutes of what ARSC is, where ARSC came down and thinking this through. So here's the reasons. I think one of the things that I like about where we're going here is if you look at all the departures from the applicable reporting framework have to be disclosed, unlike SARS 8. Personally, I think I'm not real comfortable with we can have an engagement letter with clients. We can agree we're going to have a few gap departures or a gap departure. We may or may not be independent. We say that with management. And we issue management use only statements to a client. And those statements do get out in the public. And there's those departures there. Maybe there's not accrued warranty costs. Maybe there's other gap departures that the client doesn't want you to do. I think under the proposed exposure draft coming out, I think we're plugging that hole because we're saying any departure from the reporting framework, the CPA has to report. There's no more management use only statements. There's no more agreement between the client and getting it out. We're thinking that's in the public interest. And we're thinking all the changes in the exposure draft will not change the peer review requirement. Here's the example report we're suggesting. It's 5 sentences long. We clearly said we want the first sentence to be, these financial statements are management's. We are preparing financial statements for our clients. They're management's financial statements. Pure and simple. That's all we would really need to say. So we wanted that front and center. We didn't want that in the middle. We didn't want that at the end. We performed a compilation in accordance with SARS standards of the AICPA. The legal counsel of the AICPA and the hierarchy, the AICPA spent a fair amount of time on this, taking it through the AICPA rules and said, that hooks it in the peer review requirement. It hooks the ones with no reports when that's in the engagement letter. It hooks the ones with reports. So this proposed exposure draft does not change the peer review requirement for compilations because those words are in there and in the engagement letters. I highlighted the next sentence. This wouldn't be highlighted in the report unless you decided to do it in your firm if this passes. But I highlighted it for this group to say, we felt it's important to say that we have to be objective as a CPA in doing this compilation, but we're not required to determine whether we're independent because it's now a non-attest service. We think that's important to say that to the public. If they have questions, they can ask us about it. If we want to disclose it, we've got the option of disclosing it. If the client wants us to disclose it, we would certainly disclose it. We think that's a fact, that's important. Then the next two sentences are that we didn't perform any procedures on the accuracy or completeness of the information. And the last sentence, we didn't provide any assurance on these. We want the report to look different than a review and an audit. We don't want headings. We don't want paragraphs. We don't want to mislead the public, in our view, that there's any type of assurance on this or this looks like a review or an audit report. So in our Clarity project, unlike the Clarity project on a review and an audit where there is some assurance, it's a different reporting model. We want this to be as short and to the point as possible so that even people that count paragraphs might read this one. I'm not going to go through each of the questions that we're proposing in the exposure draft. Janice has that, her materials at the breakout sessions at 10:30 and 1. We've got a few minutes before the break. I'm very comfortable taking questions from the group. Very comfortable feeling some of that love. Bring it on. So if there's any questions now, I don't want to divert the attention from what I think are the key points of this group. And I'll be around at 10:30 during that session discussion group and at 1 for that discussion group and the rest of the day. So any comments you have, again, ARSC is very, very serious about getting your input. Quickly, the review exposure draft, since this is supposed to be an accounting and review services update. The exposure period is ended. If you have any comments on it, we'd certainly welcome them. We're going to be meeting in August to cover the comment letters on the review. Our next steps, we plan to issue the exposure draft on compilation this month. In August, we're going to go over the comments on the review exposure draft, look at some other clarity things in the SARS literature. And in November, we plan to look at, to vote out the clarified reviewed standard, look at the comment letters on the compilation standard and vote that out. That's all to fit with the timing that we promised Peak when they changed 101, that we would line up the changes in review and compilation with the timing of the Peak standard. We would give practitioners the calendar year of 2014 to educate themselves, have training sessions, and be ready after December 15, 2014 to properly implement the clarified compilation review and ethics standards. Thank you.
My name's Harry Parsons from Nevada. I have one question, and it's been kind of relevant to this whole thing. I notice all the way through here there's never any reference to GAAP. It's all the framework again. Got a little problem with that. But anyway, and I think this is the first time I've ever seen ARSC be involved in the opinion. And I'll be honest, as a former member of Peak, you've referenced Peak on all of these things, that Peak has done this, and Peak has done this, and Peak has done this, so we're going behind Peak. Why don't you put Peak in here too? I've never seen an opinion that everybody's thrown into the mix like this, and never without a departure of GAAP.
Well, thanks for your question and comments. If I understand it right, we do, in the compilation exposure draft, reference GAAP, because we say the applicable financial reporting framework needs to be disclosed. If it's a full disclosure financial statement, it needs to be disclosed. That can be generally accepted accounting principles, that can be income tax basis, that can be cash basis, and that could be the other appropriate bases of accounting. So we are intending in our exposure draft to say GAAP has to be referenced if that's the framework. And the way standards are written today, as we talk applicable financial reporting framework, we don't talk GAAP. As one of our committee members said, it's driving me nuts saying applicable financial reporting framework. Why can't we just say ACPA or GAAP? But so we're not intending to duck that. And if I understand the second part, we're in the topic of compilation, we're certainly not, we're referencing Peak a lot because we agree with where Peak went with 101.3. Preparation of financial statements is a non-attest service. That clears up a lot of questions in practice. We certainly agree with that, and we feel we're reacting to it appropriately in the compilation standard. I'll tell you personally, I would prefer we don't change compilation review. I came on ours some years ago, and that was my feeling. I think there's way too many standards changes, accounting, ethics. It's hard for us as practitioners to keep up, and my thought was compilations are pretty simple, reviews are pretty simple, what do we need to change? But I think given what's gone on and given technology, I'm now at the point where I think it's time for us to improve compilation standards. So we're not blaming it on Peak, we're working with Peak on that. I think
we have questions in stereo, I think, here.
Go ahead, Billy.
I'm Bill Atkinson from Texas, and thank you for giving the presentation. And I want to thank you and your committee for the long hours and time that you put into this subject. Your last comment probably meant the most to me, which is you don't necessarily subscribe to all this. Couple of points. Number one, and I'm really representing the viewpoint of the board member, the state board member who has to face the issues that were mentioned by the predecessor speaker here about different cases in different industries, including ours. And the question comes to mind, when do you regulate dentistry? When you get the chair and when you put somebody in the chair, when you clean their teeth, or when you start taking x-rays and getting involved in fixing real medical problems. And compilation is kind of an analogous in many respects. When should the profession be regulated by our neighbors? Established the State Boards of Accountancy and Accountancy Act. When should regulation begin? And should it begin when the CPA is associated with the financial statements with the most important procedure that's performed in that relationship that you mentioned, which is client acceptance and client continuance? Just the relationship establishes some confidence on the part of the public. And I think that you alluded to that. So my concern is, where does the test really begin? And I still fundamentally, of course, coming from Texas where we've had court cases, fundamentally believe it begins when you put someone in the dental chair and you associate the CPA who's licensed with any service. The second thing is that you begin to bifurcate the independent standards in your presentation and in your proposal. You've now determined that if a direct or indirect financial interest is now a higher form of independence than the rest of the independence rules. And I have a concern about that, not that it may or may not have a higher level of weight, but it begins to introduce another complex set of questions, such as what are the other independence rules, do they matter or not? And I wonder if you and your committee dealt with that issue and to what extent, and consulted with Peak and or others. And then thirdly, I see a very complex approach now to compilations that is coming from the very group that's complaining about complexity and accounting standards. And I wonder where that correlation is. Compilations are not that difficult. They're simple. And we just have to determine when the public should begin to be protected or not. Again, back to the independence question, I guess, is my question.
Oh, thanks for your comments. I think they're all excellent. On the first one, Noel's presentation, I listened to that carefully. It's very interesting. And the legal world is interesting. This, you know, your introduction to Noel, he comes up here and scares people. I give the risk updates in our firm, and we had a management meeting this morning, 8 o'clock, and with our management team, I gave the risk update, and I said, everything's fine in the firm today. And everybody went, is that Chaz? Is that Chaz? That can't be right. Because usually I am the person that's introduced as, okay, now we're going to hear all the scary stuff. But that's just the legal world we have today, and fortunately we have, you have Noel and we have good attorneys protecting us. Your second comment on bifurcating the independent standards, I agree with. We did at ARSC have a lot of conversation about it. We did ask legal counsel, the AICPA, to help us out on it. Our preference would be to not have anything in there. We're required in Rule 501 or 503 to have the items on commission, contingent fees, and the other items. Those are ethics standards. We have to have that. That makes it a little confusing. And ours came down on the side of, and we could take out the direct financial or material indirect financial interest part, so we aren't bifurcating the independence rule. It would be a little cleaner. and more theoretically pure. But ours came down on the point of looking at that survey that went out on independence and saying, really, the public, the one thing they want to know more than anything else is if we have a financial interest in it. So we put it in there. I think if we heard from NASBA, it's confusing or complex or something, I think there'd be consideration of rethinking that. We did talk about that. We are concerned about a little bit of the complexity in the reporting now, but we don't think we can do anything about the other ethics rules. We have to state those. The direct or material indirect financial interest, we could, and we felt that was based on the survey we had, recent survey within the last few years, that was in the public interest. The last comment on the complexity and the approach of the whole thing, there is nobody on the ARS committee that has pushed more for keeping this thing simple, I think, than me. I was so happy when we pulled back that last exposure draft of 100 pages. I called it a monster. So in a compilation, we have a standard that's over 100 pages long. We are doing everything we can to keep this simple so that tax practitioners that do a half a dozen compilations can comply with professional standards. You don't have to, what we talk about at the ARS meetings is you shouldn't have to be a financial reporting expert or savvy in financial reporting to do a compilation. It's unfair to practitioners out there. So if we have it too complex, we really need your help in making this thing simple. And maybe we have taken it from as complex as it was down to the level where we think it's fairly simple, and we've worked on it too long, and we would very much appreciate making it more simple. I would be extremely happy if it was 2 or 3 pages long. We're getting a lot of pressure from the Technical Issues Committee, the AICPA, because we have taken a lot of things out of the compilation standard and put it in the guide for compilation and review. And we've seen their comment letter, and it's one of the longest comment letters I've seen on a compilation review standard from our own technical committee, the Technical Issues Committee, and they're asking us to put a lot of that stuff back in the compilation standard. ARSC is saying it's guidance. Go to the guide for it. We need the standard to be short, simple, and give practitioners a chance to comply with it. So any other comments, we are all ears. Thanks.
Yes, Chase, and my name's Galen Hansen. I'm from Colorado and a former board member in Colorado. I really appreciate you being here and taking the time to address us. I understand the long hours that Billy was talking about, being a former member of Peak. And by the way, I was one of those members that supported the notion that a compilation is a non-in-test service. So I get that. We do have some concerns about the independence. Billy articulated some of those a few years ago. We had a discussion about partial independence as it relates to reviews. So hopefully that'll be something that you reconsider. My understanding in my service on Peak was that the Auditing Standards Board and ARSC decides when independence is required, and Peak decides what independence is. So my familiarity with the definition of a test would tell me that, or the definition of independence would say it's required whenever a test is rendered. But it doesn't say that you can't require independence in a non-attest circumstance. So I think that's worth at least thinking about. Now the other thing that I think is worth raising a question about, and I realize this is outside of the area that you're working in, and that is it's not completely outside, it's the question of the report. But we've been talking about this financial reporting framework, and that financial reporting framework for the SMEs wouldn't require any specific titles. Therefore, you could have a non-GAAP title, and that would never be highlighted in the report or the legend in the compilation that is being put, the proposal that is being considered by ARSC. So if you're following what I'm saying, there would be no way for the reader to be able to distinguish between a GAAP and a non-GAAP statement in a compilation.
Let me see if I follow, Galen. Thanks for your comments. They're all excellent. Our intention in the exposure draft for the proposed compilation standard would require that the reporting framework be disclosed, either in the footnote, what basis of accounting it is, or if there's no footnotes, on the face of the statement. So it would require balance sheet, parens, GAAP basis, statement of asset and liabilities dash tax basis. That would be required. If that's not on the financial statement, a report is required, and that has to be disclosed in the compilation report. So we think it's absolutely necessary and in the public interest that the basis of accounting has to be disclosed, whatever it is. There was some discussion, well, if it's GAAP basis, do we have to disclose that? The answer was yes. There's enough AICPA going on in the compilation world. It has to be disclosed. So does that?
That answers my question. Thank you.
Okay. All right. Well, I'm past my time. Good comments and good questions. I look forward to more during the day. Thanks for inviting me.